Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess, and we run through these news articles every single weekday at around 11 a.m. talking about the latest news. Again, apologies for the sound this week. We will be back in the studio next week, and I can't wait to be back in the studio knowing everything can run smoothly again. But let's take a look at the prices of Bitcoin and Ethereum now. Bitcoin is currently sat at $23,340, and Ethereum is sat at $1,630. We have seen a slight move to the downside in the last 24 hours, which we will discuss in just a second. But right now we have seen a negative move, but over the week it hasn't been too bad. Let's take a look at the Bitcoin charts and see what is going on. Obviously, we have seen this move to the downside. If we take these lines off our charts, these come up every single day because I don't save the new lines and then I can't find my old ones. Here we are. We have this level of support, and we've drawn this on from back on the 18th of January, and then we have another point on the 13th of February, and you can see we wixed that point exactly right here. I'm hoping this level of support holds. If not, we could be going down a lot lower. $60 level. It looks like the camera's just froze then. I've just looked back and it looked like it all went off. So I will just repeat what I've just been through. We have a level of support set at $22,000. We also have one set at $21,360. And we also have one set at $20,380. That's what I'm looking at on the Bitcoin chart. Hopefully we hold these levels of support and we start to move to the upside. We are still in an uptrend. We do still have higher highs and higher lows. If we break this level of support at 21,350, then we will be seeing that lower low, and that would when I would start to be a little bit concerned. But right now we are still creating those higher highs, and therefore we still have a possibility of breaking through that $25,250 level in the short term. And if we do, the price could be very, very nice for Bitcoin and therefore for the rest of the markets as well. So that is what we are looking out for. Just hoping to hold these supports. I've already taken advantage of this dip. Nothing is financial advice, but every single time the market moves down, I like to dollar cost average into some exciting positions. That is what I've been doing this morning, taking advantage of these prices. And again, if it goes lower, I'm not all in at this point in time because I never am. Let's see what is going on in the news for today, though. We need to run through. There is a lot of news to discuss today. It was a busy news day yesterday for the news team at Crypto Saving Expert. There's a lot to uncover. Let's take a look at what has been going on. Again, unfortunately, the sound isn't as good as usual. So please make sure to like and subscribe and press that bell notification button so you can come back next week when we have improved our setup. This is just while I'm away on my holiday. So the sound isn't perfect, but we've got to do what we got to do. Let's take a look at the news today anyway and see what is happening. It says Binance plans to re-enter Singapore for corporate clients. Now, we have quite a few articles today about Binance, so let's take a look at this. In December 2021, Binance withdrew its application for a license to operate as a digital asset service provider for the local regulator and the Monetary Authority of Singapore. And the exchange also shut down its Singapore subsidiary, which operated under a temporary exemption pending the approval of the license. And Binance cited regulatory hurdles and poor transaction volume as the main cause for the closure. However, according to fresh reports, the company is making efforts to return to the country as a regulated crypto exchange, despite facing increased scrutiny in the US regulators. From the US regulators. So that's what we're seeing here. We have more news about Binance, so let's move on quickly. We have, first of all, Binance have been accused of stealing its idea of an AI-powered NFT platform. So we spoke about this yesterday in the news. We have a new AI-powered NFT platform by Binance, and within just a couple of hours, thousands of NFTs were minted. I can't see where this is in this article. Let's pull up yesterday's article so we can take a look. If we go to cryptosavingexpert.com and take a look at the news section, if we scroll down, we can find the latest cryptocurrency news. If you haven't already, make sure to go to cryptosavingexpert.com and press that big blue sign up button at the top of the page. And you will get access to the world's best and free crypto saving expert news, education, guides, and market data as well. Let's find this article about Binance. I'm not very good at multitasking, as you can tell. Here we go. We saw Binance's Picasso, new AI-powered NFT generator, sees 10,000 NFTs being minted in its first 2.5 hours. And this was a huge amount of NFTs being created, but now we are seeing that they have been accused of stealing this idea. So Binance, the world's largest exchange, has been accused of borrowing heavily from a similar project for its recently launched AI Picasso NFT platform. The South Korean designer, who goes by the Twitter handle HeyProject7, has accused Binance of copying his Chatcasso NFT project, which won first place at a recently concluded BNB chain hackathon in Seoul. Now, Chatcasso, obviously it's all after Picasso. It's a very close name to copy all of the same technology from. And let's take a look at this. He went on to share a presentation he made during the BNB chain hackathon in Seoul, in which he described how Chatcasso was an open AI type of NFT tool that drew AI generated pictures and minted them as NFT collections. And in another Twitter thread, Chatcasso team member OXGGOMA narrated how they poured all their energy into building the NFT project, stayed up late for nights, and finally won first place in the hackathon, which has led between December the 17th and December the 19th. They explained that their Chatcasso project was a tool that you can turn your creative visions into NFTs with AI, and that CZ had used the exact phrase to launch Picasso. So we can see in the CZ tweet here, you can turn your creative visions into NFTs with AI. Give it a try and show you what you make with it. So this is the accusation going on here. We can see we've also had a tweet from the same Twitter account making the accusation, saying we are ecstatic to say the least. We thought our hard work paid off and that we had a great product foundation we could keep building on, but it seems like Binance had other plans. And they added 2 months later, Binance launches a new AI product called Picasso. It's a tool you can turn your creative visions into NFTs with AI. So we'll see what comes of this. Hopefully those creators do get a payout from this at least, and as a minimum, for their creative ideas being taken from the Binance team. Let's take a look at the next article and see what we have here. Final one about Binance today. Before we get on to it, please don't forget to like and subscribe and press that bell notification button. And sorry about the lighting. It keeps going cloudy and then sunny again, so the lighting's a bit all over the shop. Let's take a look at this article. We have US senators accuse Binance of being a hotbed for illegal financial activity. The US regulators are not the only one raising questions about the operations of the world's largest crypto exchange, Binance. According to a Wall Street Journal report, a group of bipartisan senators have accused Binance of being a hotbed for illegal financial activity. And the senators, wrote a letter late Wednesday to Binance asking the company to respond to a list of questions. And the letter stated, Binance and its related entities have purposely evaded regulators, moved assets to criminals and sanctions evaders, and hidden basic financial information from its customers and the public. Now, this is obviously the complete opposite to what the perception we have of Binance is. Binance are known to be operating in a way that pleases regulators as much as possible. They have paid or are going to pay in the next couple of weeks any fines that they have against them for their early stages. Because in the early stages, when Binance was first created, it was created by engineers and they were looking at building their technology. They weren't really focused on the regulations. And this is something that Binance have said. And now Binance have said they want to pay the fines that they've got from that period of time where they weren't focusing closely on regulation enough. And they want to move past that and continue forwards because they want to work with regulators in the correct way to make sure they're regulated correctly and they can't have any charges against them. And Binance are usually really good at sticking on the right side of the regulations, but clearly these senators have other opinions. They think the opposite here. But Binance do give off the impression that they are always following regulations and trying to help, as we've seen here in Singapore. If we have where the article we were on before this, they've re-entered Singapore and they originally exited because of the, according to fresh reports, the company is making efforts to return to the country as a regulated crypto exchange, despite facing increased scrutiny from the US. So it shut down its Singapore subsidiary, which operated under a temporary exemption pending the approval of the license So they've exited because they didn't have the transaction volume and they didn't have the regulation framework in place, but now they do. So that is what we are seeing there. Let's see what's happening with this accusation of from the senators, though, to Binance. The 3 US senators addressed the letter to Binance co-founder and CEO CZ and Binance.us. The senators cited reports for numerous media outlets about Binance's internal financial activities and sought additional answers from Mr. Zhao and Mr. Schroeder. In particular, they request that Binance provide documentation on the following issues by the 16th of March. They've got 2 weeks. Copies of Binance's balance sheets dating back to 2017, estimates of the number of US-based customers on its platforms from 2017, documentation on its anti-money laundering policies and procedures, information concerning the relationship between Binance and its American subsidiary Binance.us, any communications that link ZZ with attempts to limit compliance. And at the time of writing, Binance haven't responded to this report yet, and we are waiting to see what happens next. So hopefully CZ comes out with being as transparent as possible. The best case scenario for this is if they provide all of this information, it's all correct, and they're really transparent in doing so. And usually CZ does try and be as transparent as possible. We have seen it over and over again. Make these steps on Twitter where we can all see it and make sure that it's happening, and giving that transparency is a really good thing and allows us to get trust back into centralized exchanges, because we don't all have trust in centralized exchanges right now following the FTX collapse. Maybe we shouldn't trust them in the long term. The centralized exchanges are a great way to get people into the space, and they are also a really useful tool. You just have to be careful on what exchanges you're using. And if we have trust in some of these exchanges that can provide transparency, then that is still beneficial for the industry. So we want them to be transparent on these responses, hopefully, and that would bring that encouragement back into the space that we shouldn't all be fearing for the worst all of the time. Let's take a look at the next article here, and we have crypto assets and blockchain in the UK. So some of the team from Crypto Saving Experts went to an event in London last week, a cryptocurrency event, and one of the team managed to interview Dr. Lisa Cameron, MP. So if you want to take a look at this interview and what we learned from this interview, make sure to check cryptosavingexpert.com out and make sure to go to the news section and check all that out. And as I said earlier, press that big blue sign up button there and you'll get access to the latest cryptocurrency news that is absolutely trustworthy, and we have guides, courses, and market data completely for free. And we've just had another morning meeting this morning. We have those regularly, but this morning we were talking about how we can improve the site further, and we have lots of ideas rolling around. So the site can only improve from here. It's looking really, really good so far as well. Let's take a look at this. Let's take a look at the next article. RBSwap token crashes to $0 as developers rug pull users for $130,000. So the scammers have swapped the stolen USDC and RB tokens for approximately 84 Ethereum and sent them to the OFAC sanctioned Tornado Cash. So Tornado Cash is a platform which you could send cryptocurrency into, and it would send that cryptocurrency out again, but it would mix all the transactions together. So you couldn't actually, it'd be very, very difficult to trace where the cryptocurrencies came from. So it removes that paper trail that we have on the blockchain and the transparency we have on the blockchain. Usually, because we use blockchains that are open source, we can track a coin and see where it moves from. We can see all of its previous transactions. But when we use a mixer like Tornado Cash, it becomes very difficult to do so. And recently, well, a couple of months ago, Tornado Cash became sanctioned, and the developer was actually put in prison, which I thought was bizarre. But let's take a look at this. Arbitrum-based decentralized exchange RBSwap has reportedly executed a rug pull on its users, as on-chain shows that roughly $130,000 has been drained from its liquidity pool. A rug pull is a crypto scam that occurs when a project's development team suddenly abandons the project by selling or removing its liquidity. I'm sure you all have all heard of what a rug pull is. So if a huge amount of tokens are dumped onto the markets, the liquidity will be drained, so there won't be any more movements within the market, and the original investors the sellers will take all of the money out of the markets, and the original investors will be left with nothing to show for it. So how did it happen? The incident was first flagged by a blockchain security firm, PeckShield, on Thursday morning, and the platform's native token, RB, lost all its value. According to PeckShield's tweet, RBSwap's deployer first minted 1 trillion fake RB tokens, which they swapped for the Circle USD stablecoin USDC, and the swap caused the RBI of the RB in the platform's USDC RB liquidity pool to drop. And the deployer then made a spatial arbitrage transaction by swapping USDC for RB for Ether. A spatial arbitrage involves an arbitrager using geographical price differences to buy an asset at a cheaper price and sell it at a higher price. In the final swap, earned the scammers a profit of approximately 84 ETH, which has already been transferred to the Office of Foreign Assets Control, sanctioned Tornado Cash. So during the rug pull, RB's value plunged by 100%, according to data from CoinMarketCap, and the token was trading at $1.50 before the rug, but at the time of writing, it was trading at 0.000. I'm not going to say all those, but you get the gist. It is worth noting that RBSwap team has not yet published any official statement regarding the incident. The silence has raised speculation about the incident being a rug pull or a smart contract exploit. So that is what we are taking a look at here. Obviously, it's so disappointing for those investors. There's so many scams out there within the cryptocurrency space. If this has been a rug pull, it just makes people lose trust in cryptocurrency and move out of the space. If you're a beginner that's trying to get into investing into altcoins and you become victim to something like this, it just makes them leave the cryptocurrency industry, and that is not what we want. We are fighting for adoption and we are fighting for clarity and regulation. They are the two main things that we are looking for within the cryptocurrency industry at the moment. And always. And to see things like this that slow down that adoption is very disappointing for the space as a whole. But let's take a look at the next article and see what we have here. Coinbase, Paxos, Galaxy flees. Coinbase and Paxos and Galaxy have all fled Silvergate after reports that the bank was no longer viable. So they are no longer accepting payments processed through Silvergate Capital Corporation after news spread that the crypto bank was evaluating its ability to remain viable. And this is after the crypto bank announced that it was evaluating its ability to survive. Crypto exchange Coinbase tweeted that it decided as a precaution to keep all clients' funds safe, accessible, and available. They were not going to work with Silvergate anymore. So a team at Coinbase wrote, Coinbase will be facilitating institutional client cash transactions with our other banking partners and have taken proactive action to help ensure that clients experience no impact from this change. And in a similar tweet, the Paxos tweet said basically the same thing. The stablecoin issuer also stated that it did not have any material exposure to Silvergate. And from Galaxy Digital, we have heard the same thing pretty much. They did not have any material exposure to Silvergate and decided to halt transactions with the bank to ensure client and firm assets are secure as part of Galaxy's vigorous risk management processes. So this Silvergate obviously was hit hard by the collapse of FTX. I think every single cryptocurrency, not every single, a lot of the cryptocurrency companies were affected by FTX. Having exposure to that platform has caused a huge issue for the space, has set us back a little bit, but also maybe it fast forwarded that bull market slightly. Maybe we dumped hard back in November and we'd already dumped for a long period of time. And if that was the bottom, FTX, although it was a terrible thing, maybe we needed that final trigger to push us to those lows before we could start seeing this upwards movement. And now 2023, I have to say, hasn't treated us too badly so far. I know we are currently in a dip and we are looking at that $22,340 level, but things have been much worse. Let's take a look at the market, at the next piece of news now and see what is happening. I have to say that picture that they've chosen for the RB swap token crash is hilarious. Let's see what's happening next in the news. So first we have Ethereum developers will complete final Shanghai upgrade test by March the 14th. So this is the Shanghai will finally be deployed on the mainnet. The Ethereum developers have chosen March the 14th to run the final testing of the Shanghai upgrade. At the said date, the code change will be activated precisely at epoch 162304, according to the arrangement agreed upon by the developers in a meeting on Thursday. So this is the last tending round for the Shanghai upgrade, which is meant to allow Ethereum users to withdraw staked Ethereum. Now, this is a huge deal for the cryptocurrency industry, and I think there's been quite a bit of fear around this in the industry because a lot of people are worried that Ethereum stakers are going to unstake their tokens, for one, which means there's less support for the network, and for two, they could be selling their Ethereum as well, because you have to remember, people that staked Ethereum haven't had access to their Ethereum for a long time. We also had concerns about Kraken because Kraken have to stop their staking platform in the US because they got told by the SEC that they were offering unregistered securities. And Kraken are a huge company and hold a huge amount of staked Ethereum tokens. So people were worried that Kraken would suddenly unstake all their tokens as soon as the Shanghai upgrade occurs and sell those Ethereum. But I don't think this is too much of a concern. We have to remember that Kraken do not only operate in the US, so their Ethereum stake tokens are not only from the US. And also, Kraken understand the markets. They will do what's best for them, obviously. But we have a lot of people that have staked their Ethereum and will continue to stake their Ethereum. We have a lot that may choose to unstake it, but still hold it for that long term. We are starting to see the markets move to the upside. Many of these fears originated from when the markets were just continuing to go down and down and down and down. But now we've seen this slight move to the upside. That fear has got a little bit less. The fear and greed is sat at 50 today. Because we've seen that greed start to creep back up again, there's going to be less selling pressure than when we were at the depth of the bear market and everyone was thinking we were going to go lower and lower and lower. That fear has moved out of the market slightly, so it's not as negative, and therefore we shouldn't have as much of a negative impact. Let's take a look at the next article here and see what is going on. After a security breach, a blockchain game, The Sandbox, warns users about phishing emails. So today, the blockchain-based game, The Sandbox, released a statement on its blog announcing that the company discovered that an unauthorized third party had accessed one of their workers' computers and used the data it acquired to send an email purporting to be the Sandbox. And the Sandbox official notification aimed to ensure users are aware of the incident and the information involved and the company's steps to keep users safe. So this is more of a warning. We won't go too far into this article, I think. We all understand what this is. I just wanted to bring that up so we all know in case you are a Sandbox user. Just be careful. As I said, there's a lot of scams within the cryptocurrency space, and we just need to keep watching out for them. Let's take a look at the next article we have here. Crypto exchanges are not necessarily qualified custodians, said the SEC chairman, Gary Gensler. So he shifted his focus to crypto exchanges, stating that they may not qualify as custodians of client assets, even if they say so. Jason Smith just said, what's the fear and greed index look like today? I've just checked before we jumped on this stream. It is sat at 50. So right bang in the middle. So we need to see how that plans out in the next couple of days. To be honest, I expected this to be lower given yesterday's dip when we saw that huge move to the downside. I was expecting the fear and greed index to have jumped a little bit, but not really. It's still strong at 50. So we need to keep an eye on that. Let's take a look at what's going on here. Gary Gensler has said, based upon how crypto trading and lending platforms generally operate, investment advisors cannot rely on them today as qualified custodians. To be clear, just because a crypto trading platform claims to be a qualified custodian doesn't mean that it is. He highlighted the recent string of bankruptcies by crypto exchanges and lenders, stating that customer assets were now part of bankruptcy estates instead of being in the direct control of their rightful owners. And the SEC chair, Gary Gensler, then referenced the recent proposal by the regulatory body to increase crypto custody requirements in the United States as a possible solution to protect customers and investor assets on the crypto platform. And he's explained the proposal takes up Congress's 2010 provision for us to expand the custody role to cover all of an investor's assets, not just their funds or securities. And Congress granted us new authorities to expand the custody role in response to the financial crisis and Bernie Madoff's frauds. The expanded custody role would help ensure that advisors don't inappropriately use, abuse, or lose investors' assets. So very interesting here that this is taking place. Obviously, Gary Gensler is going after all of the cryptocurrency centralized exchanges right now, trying to regulate them, but we just hope he regulates them in the correct way. That is all we can hope for, because regulation is coming for the space. We just want to make sure it's done correctly. And Coinbase have recently launched a project to try and help get our voices heard within the cryptocurrency space so that people actually within the industry can speak about how they think the regulation should happen, because we don't want people that aren't in the space, that have just done a little bit of research, try and decide how we should regulate the industry. We need to be involved in that process as cryptocurrency users, and Coinbase have just launched a campaign to start that process and to help regulate from the cryptocurrency users' perspective. So hopefully that continues, and hopefully other big companies follow suit and help with this move as well. Let's check in with the chat. Arav has said, hey Jess, has February's winners been announced yet? So if you go to cryptosavingexpert.com and you sign up here and you press and you fill in your information and you tick that button there, you get eligible to win some USDT, I believe it is, some cryptocurrency from the Crypto Saving Expert team. We have announced this over on our Twitter profile, and yesterday we did an article about this as well. I believe the winners are about to be announced, but please remember, if you haven't already, make sure to go to cryptosavingexpert.com and tick that button. And if you have already entered, you've already signed up and you want to be eligible to win this reward, make sure to go into your Crypto Saving Expert settings on your account and make sure that you've ticked the box to receive the newsletter. That is really, really important, because I just don't want you to miss out on that prize. We are doing prizes for users that are getting involved within the cryptocurrency space and signing up to cryptosavingexpert.com. Let's take a look at the next article and see what is going on. Over here, we have US court quashes tax evasion charges against MicroStrategy. So the US court has dismissed a tax evasion lawsuit against software intelligence company MicroStrategy and its founder, Michael Saylor. The verdict follows a civil complaint filed by Carl Racine, the Washington, D.C. Attorney General, on August the 31st last year, claiming that Saylor failed to pay personal income taxes while living in his D.C. penthouse, which he's publicly called home since 2005. I remember this news coming out. So the Attorney General alleged that Saylor pretended to live in Florida where no income tax rules exist. At the same time, he continually stayed in the DC province and eventually avoided paying more than $25 million in tax. MicroStrategy was also accused of helping its founder evade taxes on millions of dollars he earned while living in the district. And the OAG alleged that the company, which has up to 132,500 bitcoins in its portfolio, violated district's False Claims Act by conspiring with Saylor to escape paying taxes. The court sought monetary damages under the district's False Claims Act and penalties, interest, and treble damages. But now, 2 months after the civil complaint, the defendants filed a motion in the Superior Court of Columbia to dismiss the charges, with the court now ruling in favor of MicroStrategy. And the dismissal does not include Saylor's tax evasion. So this is just on MicroStrategy. We still want to hear more about Michael Saylor and whether he's been dismissing his own income tax. We'll keep this news coming, though. We will continue on these storylines and keep you up to date with what is going on. Let's take a look at the next article we have here. UK banks place limits on crypto purchases amid regulatory warnings. Now, I've seen a lot on this morning over on Twitter. So HSBC have said, let's start from the beginning. Nationwide has placed daily limits of £5,000 for all debit card related crypto purchases, and that rightly banned purchases with credit cards. And last month, HSBC also prohibited customers from buying cryptos with credit cards. Now, with credit cards, I understand. The credit card thing is they don't want to lend money for you to invest in cryptocurrencies when the majority of people within cryptocurrencies may not do their due diligence, and therefore it's a very risk-on asset. It's a very volatile asset. We all know that. That's why we come into cryptocurrency. It's a very volatile asset. You can make a huge amount of money in cryptocurrency, but you can also make a huge, huge loss. So those companies not wanting you to buy cryptocurrency on credit cards makes sense. They don't want to loan you funds that you're just going to put in highly risky assets. So that bit, I understand. I could deal with that one. But the daily limits of $5,000 to all debit card related crypto purchases outrightly banned purchases. So that £5,000 limit is pretty frustrating. This is what we are worried about in the space. We don't want regulation that is going to stop the traditional retail investors from accessing the industry as a whole. So if we continue down this road and it becomes that only those higher up people can enter the space, that's a huge, huge problem. That is what we want to avoid. Both banks cited warnings by the FCA that there are certain risks with purchasing digital currencies, and therefore the limits are intended to protect customers' funds. And Starling Bank made a similar move last year following the collapse of FTX. The bank informed customers it will no longer support incoming or outgoing payments to exchanges and merchants. And another UK bank, Santander, placed a £3,000 £1,000 monthly limit on all crypto-related transactions. So it's just making that fiat on and off ramp slightly more difficult for UK citizens. We can see here the regulator has said, due to requirement imposed by the FCA, Binance Markets Limited is not currently permitted to undertake any regulated activities without the written consent of the FCA. And this requirement was put in place because in the FCA's view, Binance Markets is not capable of being effectively supervised. So we are seeing just a crackdown with UK regulation as well. We all talk about the US regulation all the time, but the UK regulators are making moves as well. We just want to make sure that this doesn't dishearten people from adopting the technology and testing it out and learning about it, educating themselves about how it works. People don't actually, a very common thing I come across when I speak to people about cryptocurrency, if they're not in the space, is they don't understand the ease of using the fiat on and off ramp. They don't understand that you can just buy it and you can sell it again, just like you can another stock. And having limitations on these fiat on and off ramps will just make that slightly more complex and scare people away from the space as well. And that is not what we want to see. So we want to make sure they're regulating in the correct way. And that is, I know I've spoken about this a lot, but Coinbase's campaign to help with regulation and help give the cryptocurrency user point of view to those regulators is a huge, huge move. And also, once like the US get their regulations in order, other countries may follow suit. So we want to make sure that in these big countries like the US and the UK, we get those regulations correct, because these are the countries that many other jurisdictions may choose to follow from. Let's take a look at the final article we have here. We have US senators ask Meta to keep teenagers off its Metaverse app. Now, I saw some news yesterday as well that there was going to be a 60-minute limit on people under the age of 18 on TikTok, I believe. I mean, don't quote me on that. It may have been 18. It may have been a little bit younger. And then after that hour was up or half an hour was up, it would give you a warning and you had to type in a password before you can continue using TikTok for a longer period of time. I think this is brilliant. I think TikTok is the most brain-numbing application. It makes your attention span incredibly, incredibly short, because you're listening to a news story every 30 seconds. It's unbelievable how much it grabs your attention. So getting those young people off these platforms, maybe not getting them off them, but limiting their use is an important thing to do, in my opinion. But the US senators have jointly wrote to Meta founder Mark Zuckerberg on Thursday, asking that the company halt plans to open its Metaverse app, alternatively known as Horizon Worlds, for people aged between 13 and 17. In the letter, the senators highlighted that Meta has reportedly failed to protecting teens from harmful interactions, advertising, and content across its social networks, including Facebook and Instagram. And they have said Meta's plan to target young people with offerings in the metaverse is particularly concerning in light of our consistent failures to protect young users. And with a documented track record of failing to protect children and teens, Meta has lost parents, pediatricians, policymakers, and public's trust. And the senators also cited Meta's own report that suggested the company had yet to perfect measures to implement user safety in the metaverse. And according to them, exposing young teens to under-researched and potentially dangerous virtual world is unacceptable, as there could be physical and mental health associated. So hopefully something gets put in place to save that younger generation. I mean, the whole thing is very, very concerning to me. I understand that the technology can evolve, and in terms of technology, it's pretty impressive tools that we are creating right now. We've seen huge amounts of developments even within the last year with all of these technologies. But there is a lot of, I get really fearful when I think about this. The fact that people will just sit with their glasses on and feel like they're in another world and not move and do any physical activity is concerning, especially that younger generation as well, because you need to build that up from a young age. Otherwise, their health will just decline and all other things. And obviously it's concerning for what they'll actually be able to do in this metaverse. We just need to watch out for that. We'll see how this plays out. We'll continue on all of these stories. As I said, we do these daily live streams every single morning talking about the latest cryptocurrency news. We'll follow on from these stories as they unravel. So make sure to check out cryptosavingexpert.com. Also, we have completely free cryptocurrency courses and guides and market data. If you go to cryptosavingexpert.com, cryptocurrency.com and you press sign up and you tick that button, you will get entered into a draw as well, and you may win some cryptocurrency as well. So make sure to check out the website. Thank you very much for watching. Jason's just said, enjoy your holiday, have a Mai Tais and put your feet up. That is exactly the plan for the day, Jason. Thank you very much for tuning in, and I will see you back here on Monday for more cryptocurrency news.